Amid the adverse impact of Donald Trump's tariffs on the Canadian economy and the uncertain future of the North American Free Trade Agreement, CUSMA, the Bank of Canada has decided to hold rates steady at 2.25%. For more on the impact of this decision, we are joined now by Andrew DiCapua, Principal Economist at the Canadian Chamber of Commerce. Andrew, thank you very much for joining us.
Yeah, great to be here, Roger. Thanks.
We pretty much knew this was coming. I guess what we wanted to hear what he had to say and what stood out for you from Tiff Macklem.
Yeah, so I mean, the way I would sum up today's decision, which was, of course, expected by markets, and we were expecting the Bank of Canada to hold rates at 2.25%. But the key thing here is, the governor struck a pretty dovish tone on the economy, but not so much on rates. And when asked by reporters on how the recent stream of positive economic data, and on top of that, the positive upward revisions to the national accounts data from 2022 to 2024, how that has changed the bank's thinking in terms of the strength of the Canadian economy, the governor pretty much downplayed that in terms of its overall positive effect. He continues to talk about the high degree of uncertainty, mostly related to tariffs, and that's lingering impact on trade exposed sectors and its potential spillovers over into the new year. So we'll have to wait till their updated forecast in January. And I think he was buying some time with those remarks.
What's your worry with that almost juxtaposition?
Yeah, well, I think I think at the end of the day, the updated forecast will give us a sense as to how they're seeing this incoming data affect the economy. The governor continues to say that, listen, the trade impact is a structural impact on the economy. Rates can only do so much. And you saw reporters push today on, what about affordability? What about the large degree of mortgages that are going to renew over in the new year at higher rates? And so the governor is trying to, I think, just manage expectations. He'll do this at different points in the year where he'll try to sort of abdicate a little bit of responsibility and sit and wait to see how the information comes in. I think we're going to see a little bit of hotter inflation coming out of the last few months of the year. You'll recall we had a GST holiday last year. We're going to see some upward pressure on food prices. The bank said that they're going to look through that. And they're looking through, positive economic data. So I think it's really, it's mixed signals here with the bank. They're going to want to sit, redo their forecast, and then take it from there. But, our view is that rates are really going to be sitting tight for the foreseeable future.
Now, there had been talk there might be a rate hike, but it sounds like that, with the way you described it there, we can't see that happening necessarily.
No, I mean, it's definitely something that's on the table, right? If the economy gains steam, we saw a very strong third quarter. That was mostly due to just the mechanics of having a positive net trade and imports falling off the cliff there. So, and those are subject to revision. So the governor kind of mentioned that, right? Final domestic demand, we have seen strong points in time of seeing that in the year, but that was flat in the third quarter. So we should see a pickup in that in the fourth quarter. But again, it's just been very choppy. And so, the governor is not even thinking about rate hikes until there's just this really strong momentum on the domestic front.
And it did seem a little bit like they were almost caught off guard by some of the numbers that they did see, unemployment, the GDP. And it almost like they weren't expecting that, which I would have thought they might have been factoring that in a little more than they did.
Yeah, I think like everybody, and especially like economists, we're looking at the data with a little bit of in awe here, right? We're seeing the labor market hold up quite remarkably in terms of just looking at the labor force numbers. But then again, you look at the payroll numbers, and especially it paints a completely different picture, especially when you look at manufacturing, a sector that's been hit by the trade war, right? It's pretty much flat when it comes to job creation this year in the labor force survey, but in the payroll survey, it's still declining. significantly. So I think it's, again, there's just so many mixed signals at this point, and they're going to want to rerun the numbers to get a better sense of how things are going to pan out next year. Don't forget, we do have significant risks upcoming in, in the new year. We have population growth that has just completely halted the mortgage renewals, as I mentioned, and we have very high expectations, for investment picking up in this country that I don't think the bank is convinced of as well.
And how much of a factor going into the next year is CUSMA if it's, say they resolve it, we strike a deal? How much of a factor would that be in all this?
Well, it's a main factor. I mean, at the end of the day, the reason why the Canadian economy has been so resilient is because close to 90% of our trade, our exports to the United States, have been protected under the agreement. Absent of that, we would be in very significant economic, territory. We used the R word in the meeting there, the governor this morning. It's not recession, it's resilience. And it's in large part due to that protection under the trade agreement. So it's going to be front and center for Canadian businesses heading into the new year. But we also need to focus on the domestic part of the economy, things that are driven not by foreign demand, but by domestic demand. And so that's creating conditions for success, for investment, and affordability. And the governor kind of, punted, those responsibilities a little bit over to the federal government, as well as signaling to Canadians, like, don't wait for rates to be that much lower, because that can be self-fulfilling, of course, if Canadians sort of pull back on spending as a result of high degrees of uncertainty.
Okay, Andrew, we have to leave it there, but thank you very much for joining us.
Yeah, thanks, Roger. Take care.
Andrew DiCapua is principal economist at the Canadian Chamber of Commerce.